Okay. Hello, everybody. I am here today with, of course, one of my favorite lenders, not my
Oh, jeepers.
favorite. You know, it's like children. You don't have one favorite. They're all your favorite. So all of my preferred lenders are my favorite. Dave just happens to be one of them. So Dave Lewis
Smarter one.
from, just like I'm one of your favorite realtors.
Correct, yes.
Exactly. I know how it goes.
Uh-huh.
So Dave from Home Services Lending is here with us today, and he is going to tell us everything we need to know, including if we need to freak out or not. So what is going on in the mortgage industry today, Dave?
Well, to answer your first question, I would say or your last question, don't freak out. It's
Oh,
gonna be
okay. That's good. We should preface it with positive.
correct.
No
Yep.
freak out.
So just know that the real estate market was really, really good before COVID-19. And anybody who always says, I'm going to wait till spring to buy, well, they're just going to put that plan on hold until, maybe June or July when this is all over.
Okay.
Their need didn't change to buy a house, just the timing or the opportunity changed, right?
Okay.
So I wouldn't freak out. The housing market is in the best position it ever was. This isn't '07 and '08 because that was caused by the financial and the housing market. This is caused by a virus. So
yeah, at least this isn't our fault.
Correct. This is not our fault this time. Yeah. So we're safe there.
Yeah.
So this is more of a pause than like a hard break or to be scared. We have had some people back out of contracts simply because of this.
Sure.
And that's a thing. But I wouldn't, once this picks up and it turns around, whether that's 2 months or 9 months, we don't know. But once it does, don't expect rates to stay artificially low. Don't expect prices to stay artificially low. It's going to get more expensive, not less expensive.
So what are rates at today?
3.125 on a 30-year fixed.
That is
cheap money.
Good deal. That is cheap money. And it's been like that because I just refinanced my house and I locked in at 3.125. I mean, if let's everybody get to know Heather a little bit better. And I think that was, did rates first go down at the end of February?
Yeah, they went down to as low as like 2.75, 2.8, but they were only there for like a day, and the market got so flooded they couldn't handle the volume. And so they artificially moved rates up to offset. And then we had COVID-19, and they went up all the way to like 4% for like a week. Now they've kind of settled back down as the market kind of digests everything.
Okay, so the Fed lowered the something to zero. And this was not one of the questions that I wrote down to ask, which is why it would appear as though I'm unprepared for it.
You're good.
I am. But do you remember probably about a month ago when the Fed lowered whatever to 0 to 0.25%, and people were incorrectly thinking that they would get a mortgage for 0% interest?
Yes.
Can you explain to everybody why that is not true?
Okay. So the Fed's fund rate is the money at which banks lend to each other on a short-term basis. So short-term money.
So like what?
Days, weeks, month, not 30-year fixed mortgages.
Why would a bank lend money to another bank?
All sorts of reasons. Depends on how deep in the weeds you want to get.
Just the top of the weeds.
But just intraday, one bank may have a payoff more than another day, and they may need to borrow money just short-term until they get some things moved around their balance sheet.
So there's a lot of money moving around at banks that we probably don't really realize, think about, or necessarily even care about.
Correct.
Okay. All right. So that rate is just for the cost of money for the bank.
To lend amongst themselves, basically.
Okay. Which stimulates the economy, because if they weren't lending amongst themselves, then, it'd be like the kid who can't share on the playground and nobody wins from that.
Yep.
Is that what you teach your daughter?
Hold on here. Your screen got moved, and now I'm not very good at this. I'm trying to fix it.
Welcome to another episode of Technology Doesn't Work Ever.
At Dave Lewis is not great at technology. That's okay. I'm just trying to pull it back up, and I don't remember where it's at.
Are you looking for Zoom?
Yeah.
It's the little blue.
Got it. Found it. All right. Sorry. So yes, banks have to lend amongst themselves constantly in order to stay afloat and to meet certain criteria that the government requires of them.
Okay. So how come that rate is not available for us for mortgages?
So mortgages are a completely separate rate that's traded separately.
Okay.
Depending on what kind of loan you're doing, they're traded independently. And so you have to think about it from this perspective. An end investor is actually fronting that money you're using, and they need to get paid something. Otherwise, why would they loan money, right?
It's free in real estate.
No, or in life, really.
Yep.
And then there's a servicer involved, someone you're actually making your payments to. They have to make a margin to do their job, right?
Okay.
And then the people like me and you on the street have to get paid something to then offer that to the general public. So there's layers of people that have to get paid. There's no way to be zero. Otherwise, we'd all be working for free.
Yeah, and that's not going to happen.
Now, what's the point? I'd rather just stay home.
Right. I'm sure that people want us to work for free, but also, what if you worked for free? Like, that's not going to work for anybody.
No one's asking you to work for free.
Right. Amen. Amen. Okay. So there have been some changes with getting loans. You and I talked about this a couple of weeks ago, like, and I remember just enough to be able to ask the leading question.
Okay.
So FHA, for example, and did you say that all government-backed loans made changes? Okay. So tell us about those. If you are like, who does this affect, and what is the effect?
Okay. So we'll try to go over this like a super high level because it gets super complicated. So when Trump told everyone that you could forbear payments, that means you don't have to make the payment to the servicer, right? Sounds like a good idea. But the servicer still has to pay the end investor their money. With me so far?
Well, forbearance was my question later on. So no, I don't understand why you're talking about forbearance.
Well, you're asking why all the credit policies changed.
Okay, well, let's start with forbearance. What is forbearance?
Okay, so historically, forbearance on a mortgage means you don't make your payments for 1 to 4 months.
Okay.
At the end of that period, you owe all those payments.
So I saw a post last night, and tell me how this works, because I thought it worked that so let's say we lost our job. I lost my job and I can't make my mortgage payment this month. Well, obviously I don't want to go into foreclosure, right? So instead of starting the foreclosure process, I call the mortgage company and say, hey, I lost my job. It's coronavirus related. I'm not sure. I mean, does forbearance have to be coronavirus related?
In general, in life, no.
Okay. So I lost my job. I need some help. I really want to pay my mortgage. You know, I've done a really good job of paying my mortgage for however many years. What can we do to help me get past this bad time?
Right.
And so then I thought a forbearance was, let's say they said, oh, no problem. How long do you think it would take you to get a new job? 4 months. I mean, that might seem like a long time. It might not seem like a very long time at all. But for the sake of this example, we'll say 4 months.
Right.
So then they say, no problem. And previously, I thought that was tacked on the very end of your loan. So in 25 years, I would have 4 months of extra payments.
Right.
I read a post last night that it was actually at the end of the 4 months.
Correct.
Not only was the 4 months I just skipped my payment due,
plus the next month.
The month that was due in 4 months. So in 4 months, I would owe 5 months of mortgage payment. Who can do that?
Especially if you haven't been working. So that's the problem. So what you're thinking of is payment deferment.
Oh, okay.
Versus forbearance. So deferment is very common in student loans and car loans.
Car loans, yep.
But mortgage loans are not treated the same. They're not structured the same. They're not packaged the same. So there is no such thing as a deferment necessarily in a mortgage.
Okay.
Just a forbearance or a no pay, essentially, are your two options. And so when Trump comes out, and it's not Trump, the administration in general, says you can go into
hating on Trump. This is not a political show.
Yeah, no, I just said Trump because he's not said it, but it's the whole thing.
Okay.
Hey, you don't have to make your payments. Everyone assumed it was deferment and started signing up for it. But it's not. It's forbearance. And we know that if you skip payments for 4 months and you don't have a job for 4 months, you're not going to be able to pay 5 payments in 4 months. And so what would happen in that case, and this is still a little bit out there because we don't know for sure, they can't report you late during that period, but at the end, if you can't pay all of it, they could just foreclose on your property because you're more than 4 months delinquent.
Wow.
Right. Okay, so that's the scary part. because that's how it's intended to be used for that term,
At
forbearance.
the beginning of this call, you said, don't freak out. So
Don't freak out.
if
Now,
if
most servicers realize they don't want to have a bunch of foreclosures hit their books in 4 months. That's not ideal. So every loan servicer has a different idea of how they're going to handle it.
Okay.
Because the government's given them zero guidance.
So by loan servicer, you mean like home services, well, like Wells Fargo, US Bank,
Sure.
AT&T.
Penny Mac, anybody, Mr. Cooper, anybody you physically make your payment to.
Okay.
Mr. Cooper. Yes, those people. So if you're thinking about a forbearance, call them and ask them what their terms are.
Okay.
And their terms might change. The government right now, they're hoping they come out and give some sort of backstop or help to these guys.
Sure. I mean, they almost have to with as many people who have filed unemployment in the last couple of weeks and everybody who's whoa.
Yep.
I'm glad you said we shouldn't be freaking out because after that sentence, I kind of want to.
So that's the question. Right now, the big question is, right now the government hasn't stepped in and said they're going to help these servicers. So again, if you don't make your payment, but they still got to make the payments to taxes and insurance, now they're fronting you money for how long, for when, we don't know. And the government's not saying they're going to help them out.
And they're big employers, so that it's a bad cycle where you have tons of people already losing their job, those people not paying their mortgage, whether or not they can. And then all of a sudden the banks that employ, I mean, how many people do you know that work at Wells Fargo locally?
Right.
And
so there's two problems. One, they didn't say people had to prove they were affected by COVID.
Okay.
They can just call, hey, I want forbearance, which is a problem. Because some people will do that and not understand why.
Sure.
And two, they didn't help them with a backstop saying, okay, 20% of your book doesn't make payments on time. Are you running a 50% margin? No. So if 20% of your business stops paying, you're losing money now. And so how do they overcome that over the foreseeable future?
I mean, realistically, we're probably going to be looking at some bank bailouts, right? Like we did in 2008. I mean, how could they not?
So right now,
stimulus.
Yep. They're a little deeper here, but there's banks and then there's like secondary market. So the problem isn't the banks right now. The problem is the secondary market, who are not tied to a bank, who are like a broker or correspondent, which is what we are, which is what most people are.
Well, you lost me, Dave.
I know.
Okay, so my mortgage used to be with Wells Fargo. I just refinanced and I don't remember who it's with now. So I made my payment every month to Wells Fargo and they're a bank. Are you saying that it's not because it's a separate division, or?
There's just two legs, I guess. I don't know. I'm trying to think of how I would describe this to make it make sense. Banks just have their own products. They're one bank. They have one product. They own everything, right?
Okay, like Wells Fargo.
Yeah, we have 22 investors. One of those investors is Wells Fargo. We have other people as well. So how we do business is different.
Okay.
And so what this is affecting is the people that have multiple investors. Because when we close a loan, we put it on our money, and then we wait for the bank to say, yep, I agree, and take it from us. But there's a lag there, like 30 days, 40 days.
Ooh.
Okay, so getting back to simple. So you asked why. So some of these investors for FHA, VA, USDA, right? There's this 30-day gap. If you lose your job during that 30 days, who's stuck holding the loan?
Dave.
Correct.
Oh, no.
Right? So what do we do to mitigate risk? We raise the minimum standards to people who would be less likely to lose their jobs.
Now, is that per company? Like Home Services Lending has different standards than Joe's Loans down the street?
It is per company. Yep.
Okay.
But, meeting with 20 of my counterparts in our market that we meet bi-weekly, we're all very similar. This isn't a Home Services thing or a Fairway thing or a Gershman thing or a name another company.
I don't know. You're telling us all your friends.
I know, right? So it's just kind of, we've all taken a little bit different stances in different areas. Some of us are a little higher here, a little better there, but across the industry, it's changed. Just trying to mitigate risk. Now, here's why I said in the beginning, don't worry.
Right.
This isn't permanent, right?
Right. Temporary.
We get through this, people get back to work, we get a little more information from the government that says, here's how we're going to help you. And all of a sudden, this loosens back up again.
Right.
It's just kind of a knee-jerk reaction.
So for the person who might not be able to buy a house as quickly as they had initially planned because
Mhm.
these new changes affect them.
Mhm.
Like what, for example, what are the, I mean, because the credit score uh, floor
Right.
increased, right? So it
Yeah.
used to be you could have like a 560.
580 with minimum down.
Okay.
Yep. And some lenders have gone to 620, some to 640, some to 660, but most people have raised their floor.
And that's because, I mean, if you have a credit score under 600, well, there's probably some bills that weren't paid on time. And
Yeah, you
so
don't have the
that's
best track record of telling us you're going to make your payments even if you can.
right. And there's nothing wrong with that. We are not
No,
shaming anybody for not paying
no.
your bills, although we should all pay our bills on time.
Right.
But, you know, life happens.
Yep.
But also, life is happening right now. So you're
We
going to have
got
to delay your plans a little bit.
Yep, you got to make decisions on how a business is going to function moving forward, so you're not stuck holding the bag on a deal that you can't get rid of.
How quickly could I raise my credit score 100 points if I was at 560?
560, that'd be tough. To go from like a 600 though to like a 640 or something like that,
Huh?
2 to 3 months.
Oh, okay.
As long as you're diligent, depends on what's on there.
Okay.
And we work with credit repair companies that help people with that, or we can kind of help guide you through. Okay, if you did this, this, and this, it should get you to this.
Okay.
There's
Okay.
a
So
few
it's
ways
not
to
really a
structure it.
speedy process for
No,
the
because
beginning.
credit bureaus are usually about 30 days behind. So the information I'm seeing, let's say in April, is actually the information that was reported in March.
Okay.
So if you make a decision today to pay down a credit card, it's
Yeah.
not going to report till the end of the month. And so I might see it next month, or I might not see it until June.
Got it.
Yep.
So
Okay.
credit scores have increased. What else?
Um, that's really it. I mean, a lot of like down payment assistant programs aren't being accepted right now.
Oh, like what?
Like Iowa Finance Authority down payment assistant, where they'll help you with your down payment.
So I just had one close recently with
Mm-hmm.
IFA. Did
Mm-hmm.
they finish out the ones that were in the hopper and then they're not taking new applications?
So the issue is the IFA, basically what they've said is, okay, I close it today and you're still employed. But back to my point, if I can't get it to IFA, let's say and actually we just had a call earlier today in another state where we closed it, the person was employed. A week later, we gave the package to the bond authority or the state, and the person lost their job.
Mm.
Well, now we're stuck with that loan at basically 100% financing because it was a down payment assistance program.
Mm. So,
And we can't do forbearance because we're not guaranteed by the government because we're not,
oh
that's
my
it's too
God.
far into the weeds. But so now we don't have any option but to foreclose on the people unless they make payments.
Okay. So this was not on my list of questions to
No,
ask.
sorry.
Don't ask it. What do you think it is?
No, ask away. I'm just saying,
okay.
sorry, we got way off to the side here.
Okay, but I like that. I think these are the best conversations. And even if nobody else is interested in this, I mean, I'm learning things from you. So I
Okay,
think we're
good.
worth our time for sure. So I thought it took like 18 months approximately to foreclose on a property. But you said if it's like that forbearance, if you had 4-month forbearance and you don't pay it in the 5th month, then they could foreclose on you.
It's to start the foreclosure process is 4 months of no payments.
Oh, so 4 is the magic number.
Correct. Now they can negotiate with you. They can do whatever they want to do at that point. But if at 4 months you haven't made payments and you have no plans of making payments, they can start the foreclosure process. Now the process can take 2 months, 6 months, a year.
Okay.
Back in 07 and 08, when it was all just a crap show.
You can say the S word.
I had to censor myself. It was taking them, yes, 12 months to 18 months to get it completed. But the actual foreclosure part's 4 months delinquent.
Oh, geez. Okay. So is it a good idea to not pay your mortgage, Dave?
Never.
I think that is the moral of the story here. We should all walk away from this knowing that you should always pay your mortgage.
If you can make your mortgage payment, make it. If you can't, then call the servicer and figure out what options you have. And figure out if their forbearance process allows you to pay it back later, if they're going to make it like a second mortgage down the road, what they're going to do with that money you skip. Don't just assume it goes away.
Okay. Yeah, that's it'll be really interesting in 4 or 5 months to see who the bad guys are.
And I talked about this on a video I shot on Facebook. The same is true with rent. Not that I'm a landlord, but if you choose not to pay your landlord because you can't make your payments during COVID-19, the state of Iowa says I can't evict you. But at the end of your lease, you still owe those rental payments.
Yeah.
So all I have to do is file a small claims court for $50 and put a lien against you. So again, if you can make payments, make them.
And so let's say you didn't pay your rent for 4 months to Dave. Heather sold her rental properties. Thank goodness I do not have to deal with this right now. I do not have the strength it takes to be a landlord under normal circumstances.
Some days I don't either.
So let's say somebody, maybe it's legit, they can't pay their rent. And so then their lease is up in October, they move out, they still haven't paid you. So you go to small claims and you file for, let's say $4,000 is what the rent was that they owed you. And now that's a lien applied to them. Well, let's say a year or two goes by, they've saved up some money now. They totally forgot about that issue because, I mean, who doesn't want to forget about bad times that they've lived in, right?
Right.
So then they go and they decide that they want to purchase a house.
Yeah.
And so they apply for a mortgage. They have a realtor. Hopefully not me. I don't want to have to be the person who's like, well, you owe Dave money and he's my friend. So, but they go to buy a house.
Right.
Now, is this money that they have to pay when they buy a house or when they sell a house?
So it depends on who they're dealing with. I don't report to credit bureaus. So for me, it's multifaceted. If it's me, then no, they bought a house. We don't do buyer searches in Iowa. So they could buy a house, get into a house, never know anything about it. But if they go to refinance,
people do buyer searches, don't they?
Some do. Well, yeah, and that's another point. Some do. We don't.
Okay.
Most correspondent lenders don't. So when they would go to refinance it or sell it, that's when it would catch up to them and they would have to pay it. Now, some lenders, usually more local lenders that are smaller, do buyer searches, which means at the time of purchase, it would come up and you would have to pay it at that time on top of your down payment.
So you would either have to pay it or not buy the house.
Correct.
Because maybe you still don't have the $4,000 on top of everything else you need to buy a house.
Right. Yep.
I wonder, does that get you out of the contract?
Yeah, because you wouldn't have the assets needed to close your financing contingency, so you would get out. Yeah.
Okay.
Yep.
Well, let's not talk about that. Okay. So in the last week, Chase announced that they are, what was their announcement? That they're only doing 20% down conventional loans. Now they still have like the low income, what do they call it? Chase Dream or something like that.
Something like that. Yep.
Yeah. So
but that's only through their in-house lenders, but yeah.
So for the majority of loans that Chase Bank does, which in 10 years of selling real estate and 700-800 houses, I've never once worked with Chase. Thank goodness. I've heard bad things that it's really difficult to work with them. If someone from Chase is watching this, I apologize that this is news to you. But, I feel like that could be the beginning of a trend. What do you think?
So I sat on a call earlier today. Chase, first of all, is the largest mortgage investor in the United States.
No wonder they're difficult.
Yes. And they have some of the most warehouse lines. So warehouse lines is what we use to fund loans and then get rid of them later. So like an interim for us.
Okay.
Think of it like a home equity loan, right? You go fix up the house and you pay it off later.
Okay.
So what I heard today, which was new to me, which made more sense than what I thought, is they are trying to prove to the government that this is a real problem and they need to step in and do something. So as the largest lender, they're basically setting the example. If you guys don't do something, this is what the mortgage market's going to look like moving forward.
That makes sense.
And I hadn't thought of that before until I heard that this morning. They're basically just saying, look, guys, if you're not going to come in and backstop this and help us, you've helped everybody else, but not us, then
they're the bully leader on the playground that is going to teach your child to not share with the teachers.
Yeah, so that's the reason. At least that's a theory anyways, right? And it makes some sense.
Yeah.
Yeah. I mean, guys, you got to understand what this looks like if you don't help us out. Maybe you haven't got the message. So here's the message.
What else was on that call of yours? It sounds like it was really interesting.
A lot of it I can't share, but I know, stinkers.
Secrets. I hate
Not secrets, just company. It's a company call.
Oh, I see. Okay.
Yeah.
Well, what else haven't we talked about that we should talk about?
I don't know. I think those are the notes that I had basically. Again, this choppy time, whether it's 2 months or 6, we don't know, but before it happened, it was good. And after it happens, it should be good.
Right. And there's a lot of graphs and charts and, numbers that are done by people who are much smarter than I am in that arena that show how like your house prices should not be very affected or negatively affected.
Right.
Should be. They are saying they shouldn't be.
Right.
I mean, they are never around when they're wrong,
Right.
So what we have seen though, and actually this is a really good question. I would like to know what you have seen recently, because what we have seen recently is that prices are holding, that people are still buying, people are still inquiring on things. For the first, what week are we on? Like week 4 or 5 now?
Of this thing?
Yeah, of this
4,
thing.
something like that.
Of our new life.
Our new life.
Yeah. So for the first couple of weeks of whatever week we're in, we were definitely like, it was almost like business as usual, because the people who were already in the market stayed in the market. This is my personal experience, not, I'm not speaking on behalf of the world. They don't let me speak on behalf of the world.
Why?
I don't know. I often ask myself the same question. And so, so people who were in the market stayed in the market.
Right.
And we didn't get a lot of new inquiries. So, usually we get several people a week saying, hey, I want to buy a house. I want to sell a house. And, what you do today is what you get paid on in 90 days.
Right.
And so in the last week or so, we have seen a few more inquiries coming in, which applies to my theory, which is not based on numbers, charts, or actual facts. But when I am out driving, social distancing in my car, don't judge, traffic has picked back up. It's almost normal out. So, and like on the interstate, it seems like it's pretty normal level. And so I told my husband last week, I'm pretty sure Iowans are over it. Yeah. So, maybe that also supports the inquiries coming in the last week. What has it been like for you over the last month?
So I will say a couple of things on that. Number one, Iowa sets itself apart from the rest of the United States. So most of those reports you read are national. And so even back in 07 and 08, when there was a housing crash, places like Las Vegas and Arizona and New York and California saw 20, 30, 40% loss of values. We were like flat or like minus 2%, 3% in some spots. Now, if you were above $1 million, it was bad. But the average house price, $200,000-300,000, didn't really set much of a hit.
Right.
So I think the same is going to be true here in Iowa. I don't want to speak for New York City or New Jersey or some of those places where it's
Yeah.
So when you read those national stories, that's where they're coming from. They're not coming from Des Moines, Iowa. So to your point, I definitely think we kind of have a pause, and I definitely think 90 days from now we'll see that pause in our business.
Yep.
But what I found interesting is last week, year-over-year for purchase mortgages from last year to this year were down 35%. Okay.
You say applications were down?
Yeah. Okay. Mortgage applications for purchases were down 35%. But think about this. Nearly 20% of Americans right now are unemployed.
Yeah.
And another half of America is shelter in place. You can't even, what are you going to do? And so to only be down 35% is actually pretty crazy.
Yeah.
Especially if you remember last year's spring market was pretty good.
Right.
It was better than the year before that. So that's why I'm saying when I started this call, don't freak out. I mean, yes, it's slowed down short term. And I think you're right. I think I'm over it. I mean, I've been at home working from home for almost a month now. I'm like, really? So,
Poor Dave in his basement office. Oh.
well, my office is now my daughter's room. That's why I got to move. But so I think that we come out of this pretty good in Iowa. Again, I can't speak for other parts of the world, but I think we come out of this pretty good. Give it another 2 weeks or 30 days, and I think it's gonna be going.
Well, let's all hear it for Dave, because that is a very positive premonition, I think.
Well, I think we listen to media. They're talking about how it might be another 60 or 90 days. But again, we have as many COVID cases in the state of Iowa as New York has in a city block. Like, it's just not. So to apply us to the world is not fair.
Right.
I just don't see it taking as long here to get back up to normal. I could be wrong, but.
Well, and then for the people who say that, oh, well, it's because we're so good at social distancing and staying at home. I don't think that's true. I'm out on the streets and I see all the people out there. And there was a report about cell phone usage that showed that Iowa was one of the worst states, not the worst, but it was like in the category of the darkest color worst, where our phones told the truth, how we were not staying at home.
So what I find funny, though, is think about this. I grew up in DeSoto.
Okay.
You grew up in Guthrie Center.
Yep.
I had a buddy of mine grew up in Creston.
Okay.
He never in his entire life until he was an adult left the state of Iowa.
Oh.
And I can think of maybe 2 or 3 times until I was in my teenage years that I left the state of Iowa.
Yeah, I mean, we had family vacations to Missouri, South Dakota. I didn't go on a plane until I was.
You weren't going to China or New York City or California.
Yeah. I mean, Dave, I don't think I'll ever go to China.
But
I
guess
you know this, but I don't fit in. Like, I'm Godzilla over there, and I don't care for that. So.
But I guess my point is it's like, look at the states that have the least COVID, like North Dakota, South Dakota, Nebraska, Iowa. Mm-hmm. I mean, yes, Illinois has it, but that's because the Chicago's there.
Sure.
You look at these rural states where, a lot of these small towns don't go very far.
That's true. That's true.
And I just don't, I mean, that's just my theory, but I mean.
I know. Well, who knew that we were going to be so, intelligent on our theories based on nothing but facts or
facts in life. I mean,
based on nothing, including facts.
But you take out that chicken plant in Sioux City or Sioux Falls, Sioux City.
Yeah.
And then you take out basically like the retirement homes that got affected in like Lynn County and Cedar Rapids.
Yep.
And that's like most of the cases in Iowa. It's not most of them, but it's a lot of them. So I don't know. I just see it getting back to normal sooner than later. Let's all cross our fingers that we are back to normal in the 2 weeks that Dave Lewis from Home Services Lending.
Wow. That's not a fact. That is an opinion. That is, once again, Heather speaking on behalf of the world, which is exactly why they don't let me do that. So
love it. Love it.
All right. Well, Dave, if you tell me about the type of person that you would love to call you this afternoon to apply for a loan.
Everyone.
Even the people who might have a 500 credit score.
Yeah. If you ever want to buy a house, you got to start. It's like losing weight. You got to start some point. At some point, you got to start exercising and cutting calories. Fun fact, Dave and I met at Gigi's Pilates studio where we did TRX workouts together. Like, some weird stuff in our background. And I, 10 years ago? For years, I thought his name is Lewis. That's what they call most people call me that know me. Yeah. So but you got to start some point. So don't go it on your own. Don't try to Google it. You're not going to get the answers you want. Just call me and take 5 minutes and let's walk through it. Okay. Well, guys, you heard it here. Dave wants to talk to everybody because you have to start somewhere when it comes to buying a house. So I think that's fantastic advice. And I appreciate the inclusion. Thank you, Heather. All right, Dave, thanks so much for being here. I will drop a link to, if people want to call you, like how would they reach out to you? Do you want me to link like your Facebook business page? Dave is so high tech. Or my phone number's 515-321-5913. Oh my God, hold on a second. That's my cell. Dave for a mortgage. 515 what? 321-5913. 5913. Okay, awesome.
Well, Dave, thanks so much for being here with us. I promised you we would not go over our original time, even though we started late. Thank you for being flexible. And yeah, so if you guys have any questions for me, well, you probably know how to get hold of me. Otherwise, send me a message through Facebook. And if you need to get hold of Dave, give him a call or text. He texts.
Either.
All right. Thanks a lot, Dave. Have a great rest of your day.
Thank you. See ya.
Bye.